What a wild trading session this one turned out to be. The last trading session for the second last month, that's November. And look at the way the markets actually panned out today. We were actually holding on to a triple-digit gain at one point in time. And then the global weakness only accelerated. Europe has started off with sharp or deep cuts, and even the Dow futures, when we were getting done for the day around closing bell, were indicating a downside of over 1%. Eurozone inflation rate has now hit a record of near about 5%, 4.9% to be precise, for the month of November, and that surely didn't go down well for the European region, which saw deep gashes for itself. That said, I think the one message that's clear is that the global weakness is something that you can't get away with. The fact that our market saw the weakness coming in much before the Omicron virus scare or variant scare. We've already fallen about 7.5% from the October 19 highs. That said, there was no hiding place today. There were a few sectors which did better relatively than what the rest of the market is doing. But look at the way some of the metal names, automobiles, banks, some of the other laggards from within the real estate pack, for instance, panned out, or for that matter, even telecom, which was also an underperformer today. That didn't quite make up for the gainers that you had at your hand. So let's start off with the losing list first. Tata Steel fell 4%. There was JSW Steel, which was down 3%. There was Kotak Bank, the gainer from yesterday, that pretty much undid all of its yesterday's gain, was down 3% again. Adani Ports, Hero MotoCorp, IndusInd Bank, Hindalco, Bajaj Finance, Eicher, M&M, Bharti, Reliance, the big support for the market of late. All of these stocks were caving in. Similar was the case for the broad end of the market, wherein there was a 5.25% cut coming in for Emphasis. Godrej Properties was down 5%. Mindtree was down near about 4%. PI Industries was down 3.5%. And on the flip side, there was Power Grid, Tata Consumer, Shree Cement, Titan, Bajaj Finserv, along with Bajaj Finance, which were the gainers. And some of the specialty chemical names and the reopen trade saw some dead cat bounce after the kind of sell-off that they've seen in the last 10 days or so. So Indian Hotels bounced back 4.6%. There was GSPL, there was Metropolis, which continues to hold good. There was Navin Fluorine, which was down 6%, and that was the case with REC as well, which held out by about 6%. So going forward, of course, what's key for the market is to really look out for as to how the FII selling actually continues, something that we pointed out yesterday as well. One really needs to see after the 22,000 crore rupees that they've sold off on a net basis in the last a couple of trading sessions, whether this selling actually gets accelerated, given that now the global markets as well are coming off. That's something that one needs to keep on our radar. Part of the weakness today in the dying minutes of trade was also because of the MSCI index rejig balancing. That also is why you saw specific outflows from some of the stocks which have now been ousted from the MSCI India index, and outflows into the ones which have been included in the list. But that aside, there's no taking away from the fact that the market is looking brittle. At one point in time, we even breached the 17K mark today and then just about managed to defend that level. Similar was the case with the broad end of the market as well. After maintaining its lead within the advances for a large part of today's trading session, we finally gave up that as well. But let's see what tomorrow has in store for us. We're going to officially be entering the last trading month for the calendar year 2021, December. We'll have the Motown sales as well trickle in. So let's see which way the markets head from here.